The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon until 1 p.m. Eastern Time. My pleasure to be here on this 9th of January. Let's go to the markets. The Dow is up 141 at 23,928, leg C in the Chapman wave. The MACD, the moving average convergence divergence, is strong. The stochastic is now finally over the 60% area, which is what I've been waiting for. We're in a buy mode, meaning that there should be a D still to come. And the stochastics at 72%. The weekly chart shows that the 9-period exponential moving average, this pink line right there in the middle chart. So on the left, you've got the daily Dow. In the middle, you've got the weekly. On the right, just for this moment, I've got a 120-minute chart saying you're at the 200-period exponential moving average. This is where I would expect resistance. It's in leg D. And we're going to watch this very closely. The MACD is very strong. The stochastics at 93%. So any pullback should be transitory. Let's get to the monthly chart. There it is, monthly chart right now. Got it. Okay, monthly chart shows you that we're starting to repair the damage of December. Nothing to talk about right now until we can break into the 14-period exponential moving average of 24,300s. Closing above that says, you know what? And then I'm going to have a whole different scenario. But at this particular point, you've got to anticipate that this is resistance. And it's still quite a way to go, 500 points. The way things are moving these days, that could be done quickly. Doesn't matter. Right now, we're looking at the daily that's improved tremendously to a buy mode. The weekly hasn't yet given a buy signal to replace the sell mode, so we'll just have to wait. We have to wait for Friday's close at 4 o'clock. Meantime, back at the range, the S&P, which should be in sync with the Dow, is only in leg B. It did not make a new recovery high for leg B on the 2nd of January, as the Dow and a number of the other indices did, but it's very strong right now in leg B, and that should go to a C and a D. But in the meantime, the MACD is good, stochastics is 75%. Here we've got something different because it has just touched the 9-period moving average in the weekly, and it bounced off the very important 200-period exponential moving average when it went to 2345. And that moving average was at about 2380 88 at the time. Now it's at 2392. So parameters to watch are very strong support, about 20 points down. 2560s should be good support in any pullback here. And the upside has a resistance that's just taken out. Today, there was a resistance on the 19th of 2585. Today's high is already 2590. And oh, maybe I'll do this as well. Let me show you this right here. You see this chart? This has all the resistances, automated Chapman wave projections of the resistance and support levels. And 2559 was one. It went above it. 2629 is the outer one on the upside. Let's go to the QQQ. We'll talk about that in relation to this particular projection chart. 158.50 was the resistance. It's gone above that. The QQQ market vectors Q. This is the Invesco QQ Trust Series trading at 160.86. It is up 133. That's very important because it has taken out resistance. It's taken out the resistance of the 19th of December. The MACD strong stochastic is at 74%. This is a nice V-shape. This is a better pattern actually than down the S&P in terms of the V-shape recovery. So let's say that the support should be in the 157.80 area. If there's a sudden very sharp pullback, now we can get out. I know I'll go to the IWM. That's the Russell 2000. Russell 2000 trading right now up 73 cents at 142.47. And it went right through 139.16 resistance. This is much more a V-shape. This is even better than the Qs. Much better V-shape pattern because the stochastic has now gone to 80%. If it flattens out over 80%, you've got yourself a conviction, a really strong conviction of a buy mode. And then the 50-period moving average round about the 144 area is next, and it's at 142.51 right now. I'd like to go to gold because gold has held really well, but it hasn't broken to the upside today with the dollar pulling back very sharply. It's up 3.6. You can see there's a plethora of resistance levels right here in the 1280 area, 1285, 1288. It actually went higher. It went to 1290. I think it touched 12. Yep, it went to 1300. It went to 1300 4 days ago. Now having a high-level consolidation. Silver also is, so gold is up 3.4 at 1289. Silver is up, let me get to that. Silver is up a little slow. Oh, it's down, minus 0.38. It was up earlier. Now it's a little bit down. And now I want to go to, I'm going to get out of this, if you don't mind. Just get out of that. And we'll go straight to the actual chart here. This is a peak E with a long-legged doji. It went underneath that candle. It hasn't closed under it, but it's showing that there is some resistance. 1564 is a key support in the very near term, not short term. Short term, you can even go to the 1240s. I'm sorry, 1540s, and that weekly chart is very strong. The technicals and the daily are good. Silver's acting very well. Finally, if I'd say anything about 1525 was very positive. We've seen what's happened since it's broken above that. It's treating the 200-period moving average in the daily as supported 1548. 1542 is the 14-period exponential moving average. So that's very good. Let's just have a look at the dollar. And you'll see dollar took a big dive today. Dollar is down 62 at 95.28, right on the 200-period exponential moving average daily support level. It's getting really close to support that it needs to hold. I'd say that in my overview of the dollar, we remain long. We finally took profits about a month ago because it looked to me as if it needed a timeout, even though it had acted extremely well. Weekly chart is starting to deteriorate technically, and at 95.28, I'm looking at this candle right here as key support, 94.79, and I would not like to see the dollar. It could, but I don't want to see it break 93.81. Key support from about the summer. And that monthly chart is still very strong as it stands. So let's go to high-grade copper. Is that finally up? High-grade copper is up 0.004 at 2.66. And I'm looking at this right here. Let me just check that out. In fact, I didn't put the clock up. That was a mistake. So I have no clue as to time. Let me just do this because I need to get volume a little louder so that I am listening to the right thing. I want to hear that music. You do not want to be talking through the music. There we go. Come on. Up, there it is. Okay. Music's coming. The Dow is up 140. We'll be back. Basil Chapman, Tiger Technicians Hour.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here, and we're back. I just wanted to show you this high-grade copper. These are the techniques I'm going to be discussing in great detail in my webinar that's coming up. This is the all-day webinar, January the 23rd. At 9 o'clock until noon, and then 1 o'clock until 4:30. First of all, we start off looking at the particular patterns that are appropriate for that particular phase of the market and the different techniques that I want you to talk about. And within that context, there are things like this cup formation. Now, right here, how you can use the plumb line, where you choose the plumb line from. Sometimes it's perfect if you can use the very low or the very high, where you can see the number of bars to the downside will be the same number of bars going back to that phase on the upside, or if it's a cup formation. If it's an arch formation, you'll see the inverse. You'll see going up and then say 32 bars to the upside, and you wait to see if there's 32 bars to the downside. These are all different techniques. How do you use this MACD, the moving average convergence divergence? Look how beautiful this is. Look, in high-grade copper, when the MACD in the monthly chart broke positive back in around about July of 2016, that green line, the 9-period differential, this continued higher all the way. If you use a Chapman wave technique of the peaks to D, and especially if it goes to an E, the technicals are deteriorating, you know that there's a chance of a pullback. How deep? There's a whole bunch of techniques to define the deepness. And look what happened. It went to a peak E, and that left side, right side price time edge pulls back, and the MACD turns negative, and now you've got a negative copper. So now what we're looking at here in the weekly chart of copper is that there's a deflection possible in the MACD. It crossed positive, made an arch formation, and then deteriorated significantly as the MACD was still pretty good, but the stochastic was fading. It didn't even go over 80%. That was the clue. And even now, it's still very weak. So a lot has to happen. The MACD has to deflect higher, maybe make an M formation. Those are techniques that we're going to discuss. We're going to talk about, I'm showing you now the very short term. This is the, there it is. This is the E-mini. Made a peak G/B as the MACD turned down, the stochastic turned down sharply, and the on-balance volume made an inverted V-shaped top right there at about noon. pulls back from the high today of 25.92.75, pulls back to the 25.86.87 area. Now it's trying to rally, but there you are, 5-minute chart, PD. Now this is going to be very interesting because the 10-minute chart, which I would call, let's call it a weekly chart, pull back deeper than all the initial signals that turn to the upside. So this has to be a peak B. That says there's a good chance that now you can go to a C and even a D, up 17 in the E-mini. Now I'd expected, based on a number of things, that first of all, I had a Chapman wave trend gauge high reading, which suggested within 2 sessions there should be a 9 to 11 point sharp rally in the E-mini overnight to today or tomorrow. That should help the Dow and the S&P move sharply high. That all worked out. Then I said there should be a sharp pullback. Wow, was there ever a sharp pullback? Look at this, going from 25.90 at 10 minutes past 10 to 25.69. I would say that that's a pretty deep correction. So now there's another buy mode. So for us, we've been long the Dow. We've been actually buying the Dow ever since the December 26 low. But the one position we have here that's really exciting is we have calls on the 228 January position that closes out Friday a week. Tomorrow a week, Friday a week. And what's really important about it is, if I can just check it out right here, we took profit. I said to subscribers to my opening call, take profits today. If you have one position, we're going to keep that position. You have more than one, you want to take some profits right there at the opening. That was 10.75 from our 720 entry. That is a almost 49% increase in price. Fantastic gain. Only trouble is, for that, I wouldn't say trouble. The only issue is that if that was the only one we had, we'd be out. And today is trading at 11.58. I mean, that's a 60-something% gain. So that's the reason why I said, you've got to keep something. All right. Question I had, and I don't know if I'm seeing it. Is there a caller on the line? I'm just taking a guess. Is there a caller on the line? No. Okay, good. I just couldn't see that. We're out of high-grade copper. We're going to go to the, yes, I could see, obviously. So look at crude oil. What a nice move up, 2.23 at 52.02. This is leg C, very strong in the Chapman wave. This is in a buy mode, and it's about to attack the next resistance level, which is that candle of the 13th of December of 53.34. This is exactly what we wanted to see. If I said I'm not interested in crude oil until it can get to the 50, what did I say? I think it said until it can get to 51.75, 52.25. Well, we're right in that area right now. This is really good action, and this is a positive for both the market and for crude oil. So trading in leg A, gray A in the weekly, only because there's nothing established yet as buy, even a buy signal hasn't been triggered yet. But look at that beautiful candle. That's what I was talking about yesterday. I said that candle could be very important because it has all the characteristics of what you want to see in a doji at a bottom candle. Now let's look at the, so that's crude oil. Look at the TLT. That's the bonds. We want to see them down. Yep, down 49 cents in the TLT at 120.94. Not a big deal, but it is down from the 123 high that was made, 123.86, made about 5-6 days ago. And that is very important. And the weekly chart of the TLT is still in a buy mode at peak C. If there's no new recovery high above 123.86 this week, I don't think there will be. MACD's at 86. That's good. I'm sorry, the MACD is very strong. Stochastics at 86. Short term, the daily has just turned negative technically, but it's holding the 14-period moving average. So it's saying to me, and I discussed this earlier, I said that I think yields are in a range now. I don't think they're going to break up, break down. I just think now they've established some kind of a range, and that's going to be very important. Next thing I want to see is, here we go. Did that. Crude oil. Oh, EUR-USD. I wanted to see what the euro is doing. Should be up. Yep, there it is. It was looking terrible just the other day. It was down in the 1.31 area, 1.30, 1.31. Now it is at 1.526. This is very good action. And the weekly chart finally is showing some, there are some energy. And that says that at 1.152, there's a chance that the next peak of importance at the high of the week of the 19th of October at 1.162 could be the next target. And you can see there's a cup formation trying to form in the monthly chart. This is the first pretty decent break to the upside we've had since I think it was around about August. Let's go to the USD JPY. I believe I can hear music in the background. Yes, I do. That's holding okay. It's down 0.43 at 108.311. Basil Chapman, Tiger Technicians Hour. Dow's at 143. We'll be back straight after these important messages.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and let's see. So I'm just checking. Yep, gold is up 4.1. I thought we'd look at this with all the resistance levels, etc. So PPA was a question I had about here. This is the, let me look at that. What is it? I never remember. This is the defense area. This is the defense and aerospace ETF, PPA, trading at 50.97, up 26 cents. And here we go. Just right above resistance on the daily at 50.95. has 10-minute resistance at 51.08 and 51.47 and 51.43 in the 120-minute chart. And where is it trading right now? At 50.97. So you can see a lot of these indices are getting right to an area where you would expect under other conditions that there should be a pullback. But that V-shaped recovery, it's so important in the V-shape to continue higher and have just intraday or no more than 1 day of a pullback, and then you've got to get back on track. And then at some point you take a much bigger digestive phase. A couple of clues that I'm looking at here. Let me just do this. I mentioned yesterday that Raytheon could have a bounce, but I think that for the more intermediate term, it still needs longer to go. Yeah, look at that. That's not a very big move. Boeing, of course, had a really good day yesterday. Another one today, it's up 4 at 344. You realize the low was, the all-time high was a 394. Takes a little bit of a tumble, and it goes down to 290, 292.50, 292.47 on the 26th, and it's trading 50 points high. 50, yep, it's at 344 right now in a leg B. So that's very good action. And I'm not dismissing Boeing, because Boeing, for everything that we're looking at, the economy, for maybe in the defense sector, but I'm looking at it more as an economic structure. Boeing is really important. I do not want to see Boeing get smashed to the downside, take another 100-point dive, get down to the 260s. I prefer it didn't do that. I prefer it just chop to the side. Why? Because look at the industry of Boeing. It is the airlines. It is the materials, all those different materials, semiconductors. It's just got everything in it. So it's really important that Boeing maintains some kind of consolidation, a generic term, rather than a real bear market. But I have to say 394 to 290, 100 points, 30%. That was a pretty serious decline. So you've seen so many of these. Let's just see what Square is doing. I had a question about that. I wanted to have it as one of our buys. I didn't do that. We've got others. This one's doing very nicely now. It's gone from a low of 50, having got cut in exactly half, 50% from the 101 all-time high back in October, the week of October the 3rd of 2018. It certainly deserves a decent rally. It's gone right through the 9-period moving average weekly resistance in the 63.14 area, and it's 65.27. It's just testing right now the 14-period moving average of the weekly chart. This is really good. MACD and stochastic are very weak. So it's the daily that really has to be the rocket ship that takes it from 50 to 65, $15, I would say. That's a pretty darn good gain. And what we're looking at is it's over the 200-period moving average daily resistance. So this, to me, is a good sign. And not only that, Square, like Boeing in the big macro picture, so Square in the micro picture, because Square does all those payments, software payments, managing receipts, etc., for those very small business owners that, like you see the food trucks, etc., or they go to a flea market. Most of those people are using something like Square, and that's really important for the mobility to be able to take those payments. I like this. This is a good action. It was important. I want to see what the semiconductors are doing. I had a question about that. Oh, today's a nice day, up 2.56 at 90.22. I've been watching this closely because yesterday was a very disappointing session, and it's important that the semiconductor get away from the 80.71 double low. You remember we went all the way back 2 years, and now you're taking off to the upside a little bit, but until it gets to the 92.80 to the 94.30 area, I'm just treating this as a bounce. Now, the big question for me and for everyone is, was that the low? Well, if you look at the VIX index, that V low after that December the 26th sudden cascade on a day that should have bounced, it turned around and dropped hundreds and hundreds of points. We're looking at the VIX at 19.96. It still has not gone to the 18s, but for the first time, it's starting to trade in the teens. 1996. I like that. I think that's very good. I look at this as if to say, yeah, you got to forget about the wave count. It's much more important to see these spirals to the upside and then plummets. Look at this, China plus US rates back in August of 2015, 53.29. I never understood why it spiraled that high, but it did. And then it started on a little bit of a decline, $53 to 8.56. I would say that's a big decline. And then it ran in a very short 3 weeks. It went from 8.56 to 50.30. Higher yields. There were other things going on, but I didn't understand that one either. But it made more sense. No, that's the one that made less sense than the one back in August of 2015 where everything was turning down. Now, what was important in terms of the VIX index is that it plummeted then to the 10 level. What exactly was that 10? Let me just see. Uh-oh. I think I lost my internet. That is just terrible. Now, I'm not sure if you can hear me. I'm not sure about anything. Can you see? I can see that. Let me just type in here. Is there sound? I just had a fear that this would happen. Is there any sound? Anyway, I'm going to just do this for the moment. I'm not sure if the sound is still continuing. I don't think it is, because yes, there is. Okay, so there is, and I'm not sure where the chart is and which chart you're looking at. I'm stuck on the VIX index, I believe. If that's the case, I'm not able at this particular point to actually move these charts, but I'm going to discuss a bunch of things before we get to the break. I'll be able to come back on during the break and get those charts up. It's just that I'm not able to reach my office computer. I'm doing this all remotely, and a pocket of data is just not there. So I have to come back with a different internet connection. So let me just say, 3 things are important. One is we did not get that VIX huge spiral to the upside that is accompanied by news reporters, cameras, everything, newspaper headlines, just waiting for a big announcement on the front page of the paper to say market crashes, smashes, or whatever terms they want to use. And that is usually an intraday thing where over a 2-3 day period, the volatility index keeps spiraling higher. The market keeps closing triple digit down, and the Dow really sharply down in the S&P and all the indices. And eventually it comes like to a Friday. And then over the news, there's just terrible, terrible news. That should have been December the 26th. Instead of December the 26th, we're trying to rally and then plummeted. So maybe that in a way did everything we needed, taking the VIX to the high of, what is that high? I can't read it, of course, just about 36. And now I can hear the
Hi, folks,
music.
This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, Ron, we're back. So we're looking at TLRY, Tilray Inc., medical cannabis. Question in the den. What about? Couldn't read it quick. I just glanced at it. So, folks, for tomorrow, if you have questions in the den, try to get them before I go online so that I can prepare. I'm not able to switch. I'm using one computer to do 6 or 7 different things. But Tilray today went to 87.38. Yes, S&P, I do like it. I like the action that it went above yesterday's high. It's really holding just a tad above it. It did spike quite a bit higher. Now what it's doing is establishing the 76 40-period exponential moving average as pretty important support at this particular point, and 76, let's call it 30s to 20s. That's important support. I do like it. I think the weekly needs a lot of work to improve, but that has to come from the daily. Remember, the short term leads the next time frame. So in this particular instance, the daily is leading the weekly, and until it really starts to get 90 is really my target for the upside. It might happen today, but I would say over the next week, 90 should be the target, and a close above 91 would be really positive. That's what it needs, and then it can start tackling all those resistance levels at about 94, and then 100 in the 94 and 98, I'd say, in the weekly chart. But do it one step at a time. This is very good. I want to look at. Question I had was, UTX. The other day, UTX was mentioned, and I looked at it, and I have to tell you, this to me is not a good sign. United Technologies goes from 144 down to 100, 44% decline. That's not good. And now it's rallying only from 100 to 109, 108. Hey, something's wrong with that picture. Let's look at Triple M. And Triple M is also the same thing, goes from 259 down to the 170s. This is not good. And I'm just going to say, call me afternoon, please. There you are. And what we're looking at is at 193.07 is up $1.39. This is not good. And that's the reason why I think when this unfolds, there's going to be plenty of opportunities to buy many, many different stocks and sectors. This is a rolling correction on the upside. It was a rolling correction on the a rolling series of highs on the upside starting in January of last year. And it's been a rolling correction to the downside. But December the 26th was a key ictus, a key low, of which many sectors participated very strongly to the upside, but not all. Semis finally caught up, but yesterday I was looking at it and I'm saying, this is not good. This is not good at all. We need to look at the broker-dealer once again. Broker-dealer, it's coming back again. We're trying to buy this. I like it, 57.72, but it's very, very low volume. Almost have to book an appointment there. Something I'd actually forgotten about yesterday, but I do like the fact that it's running. But this is a big move. It's going to take a while before it goes from the high of 70.58 back in March to the low that was made of 51. These are big declines. So I'm watching these. I'm watching the. It's important that USO, that the United States Oil Fund is running very strongly. This is A, B, this is in leg B. Funnily enough, I think it was UCO. I looked at so close to buying UCO because I wanted a mixed portfolio, and that has gone from the 12s to the 17s, 5 points. Wow, that is great. Well, I can't complain. We've got that option that went from 720, now it's at 1158. That's a really big move, but it's not that. It's the point is that I have a time expiration here on the option. Here you would not. You just take it and say, if you're in the 12 to 13 area and it's trading at 17, you've got a huge cushion of time and price. Now, the next thing I want you to look at the SLX. This is really to do with China. Up today at 75 cents at 37.93. This is the Market Vectors Steel ETF. Terrible action from 51s down to the 33s. Whew. But it's now at 37. That's good. But if you look at this monthly chart, it says that's a lot of work to repair the damage in the technicals. So it has to come from the daily, then the weekly. So I'm trying to show you sectors that are important. Just for now, let me just look. TU, is that going to show up here? I think it's TU as an at TU. Yes, there it is. So this is what I was discussed the other day. The 2-year and the 5-year, I really think it's the 2-year and 10-year that you have to be looking at. So the 2-year has gone to a sell signal upgrade, probably by the end of the day, to a sell mode. This is the 2-year yield at 105.30. Wait. Let me get that right. This is the 2-year U.S. Treasury notes continuous contract. Sorry, this is just the notes itself. And that says that we might be looking at an inversion of the yields. And if that's the case, that is of consequences. You're looking at a year to 2 years before this usually impacts the market negatively. Look at the TNX sneeze. It's the noontime sneeze, I guess. There it is. The TNX trading at 27.37. That's the 10-year. So that, if you look at it from if you look from 32.48, 3.28 in October, and it pulls back to 25.54. Is that also December? No, that was January the 3rd of 2019. That is a big move down. And that's the reason why I say I think we're trading in a range now. I think it's going to be between 25 and 28. Maybe it even goes to 20 touches 29. But it's a way smaller range than the big move down. But it does mean that I don't think you have to worry about yields at this particular point, even though because of the TLT pulling back, because money is going back into equities out of bonds in that big pullback, where bonds skyrocketed from 112, the TLT, to the 123 area. I think it was even more, TLT. I think it went to 123.86. Yeah, 123.86. That's a big move. And now I think we're just in this kind of formulating a range, and that's going to be important. Question I had about Amazon. Sure, let's just do these right now before the break. Amazon trading at 16.59. If you look at this particular projection chart, series of charts, the Amazon is right in a resistance area between 1648 and 1679. It's trading right now at 16.59. So Amazon.com up 3.38 at 1660. This is just in an area of resistance, but if it breaks to the 1683 area, that's going to be a big thing. The very next big resistance is up 1760 area. Good move. I'll be right back. Basil Chapman, Tiger Technicians Hour.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yeah, there it is. Back. Hi, folks. We're back. So the Dow is up 171. This is really good action. I mean, this is relentless for those bears. Ooh, not good. So I'm looking at Amazon. And I'm saying there's really good support at about 1650 to 40s, and it should still go to a leg D. It's at a peak C. Hey, wait a minute. Let's just go through. Visa has been really strong. It was a monster going to the upside into the 150s, going all the way in 2 years. It went from the 70 area to 150, doubles, and then pulls back very sharply in basically a bear market. And now it's come back almost 50% in leg B in the daily. I like this very much. Trading at 139, up 2.37. Let's see now what Berkshire Hathaway is doing. Did it get back its losses from the other day, the Apple? No, it's kind of stuck. Yeah, it just needs a bit of a breather. It's a huge stock. Just needs a bit of a break. So a couple of questions that I had was, could I also look at, it was on the other page, if I get it. Yeah, could I look at, where was it? Oh, Walmart. So Walmart is trading up a little bit. It's up 43 cents at 96.63. We've been long since the 92s. I like this. I think it's in a portfolio. It's a nice mix going to Walmart. You can go to high tech, something conservative like almost a defensive play like a Walmart. And then you've got all these different things. I didn't do Ford today. I was thinking of doing Ford, and I thought, gosh, let's get a pullback. No way did it pull back. Oh, my, look at this. It's up at 8.72, up 36 cents, 35 cents at 8.71. This is nice action from the autos. Look, General Motors is up also 75 cents at 35.55. None of them are looking spectacular, but I'm really pleased to see that they're rallying, because this is part of this particular scenario that we're looking at right now. You want to see movement to the upside. So this is leg B. It should go to a C above 35.68 if there's no new recovery high today. That's the next level. And then we've got 36.40, the 200 period exponential moving average. Am I hearing the music? That's the end of the show? Yep, that's the end of the show. Stay tuned for Steve, Dave, and Tom O'Brien. Check out my webinar coming up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.